Hello, master traders. Looks like we got our answers from the market makers. My last question I posed in my last video I posed the question, can the bulls reclaim the 5 daily moving average? And today we got our answer. The answer was yes. Now guys, lately I've been talking about the importance of having the right mindset when it comes to trading. Now, Uncle Charters, I don't like to do the predictions, okay? When I learn how the market moves and how manipulated it is, I realize it doesn't really matter to know beforehand what the next move is. It's nearly impossible to get the answer right. And market makers love it when retail traders think they know what the next move is going to be. But what I do know is that there are constant traps in the market. So for me, I don't even want to predict the market. I don't care to predict the market. The market loves to trap. That's why I follow the trap. I trade with the traps because the market makers, even though they make it hard for us to know beforehand what the next move's going to be, when they do eventually make a move, they tend to telegraph it. They telegraph their movement and it tends to come in the form of a trap, false breakout or a false breakdown setup. Now, we look at today's price action on the 15-minute chart on the smaller time frame. What happened? Once again, the market makers trapped some retail traders. In this case, they trapped the retail bears. You guys can see here, market was above my 600 level. And then on the 15-minute candle, the 15-minute chart on the 10 o'clock candle Eastern time, we got a breakdown of the 600 level, and then the 1015 candle, we recaptured it on the 15-minute chart. This was all alerted in Uncle's Discord. Check out the pinned comment below if you want to join. Now, this happened yesterday as well, guys. This happened yesterday as well. The market in the previous day broke down my 598 level right here when it gapped down to 598 level. And then the next day, they cleared 598 on the 15-minute chart, recaptured the 598 level, and they even did it intraday when they broke down the 600 level and they recaptured it, pushing the price higher. Look at all these trap moves, these false breakdown setups, these, not much of a false breakout just yet. It may come soon, but as of right now, the market makers have been trapping the bears while trying to push the price higher. Okay, now one thing I do notice, and I want you guys to notice as well, that helped us with trading today, especially in the Discord, was you see all these trap moves. But how do we know when the market when the market's not trying to trap us with a breakout or a breakdown? Now you guys can see here yesterday that 602 area, served as a tough sell zone, and then today, once we cleared 602, that area became the buy zone, which also helped push the market higher. So these are examples down here of what false breakdowns look like. And there's an example of what an actual breakout would look like. We cleared the level and then we retest that level as a support, changing its role from resistance to support, giving us a sign that it's going to push higher. Gave us another level higher, which was good. We did clear the 5 daily moving average. Now the next question is, are we going to go back to all-time highs again? Okay, because the last time we cleared the 5 daily moving average, we technically did get to the area of all-time high, but we rejected hard, giving us a false breakout, pushing the SPY lower. This was a false breakout. But now that false breakout has been canceled and it turned to a false breakdown where it recaptured. So my plan for tomorrow is pretty straightforward. I'm going to stay bullish on the SPY as long as SPY stays above that 602 level, as long as it stays above the 5 daily moving average. Because a lot of times, more often than not, doesn't always happen, but more often than not, the recapture of the 5 daily moving average tends to be bullish and leads to more upside. So because of that, I'm going to stay bullish as long as SPY stays above the 602 level. And because of that, I'm going to switch back to bearish if the price can break back below. I'm not going to argue with the price action, fellow master traders. We're not going to argue with the price action. We're going to follow the price action and trade it unbiasedly like sheeps, because sheeps are followers and we're followers of the price action. Okay, so above 602 tomorrow, above the 5 daily moving average, I recommend staying bullish. It's above my 604 level right now, so next resistance level I have is at 606, 607.5, 609, and 611. All right, do not go short unless we break down 604 and break down 602. Give us the false breakout setup, play and trade with the traps. Okay, right now the bulls are winning, so if market makers want to trap the bulls, it needs to come in the form of a false breakout, and that will be our trigger to go short below 602. Put 600. I think we can drop all the way down to 596 or even lower than that. Okay, because if we get that false breakout, that could be a lower high to send us down to previous low or a lower low. Okay, follow the price action, guys. Triple Q, it maintained its recapture of the 5 daily moving average and managed to clear that 524 fib level, even close above 526. From here, 528, 529.5, and 530.7 are all targets of mine. 530.7 being a fib level. Those are all targets as long as Triple Q can stay above 524. Now, if we break back below 524 and we break back below 521, I would be bearish on Triple Q. That will be a loss of a fib level, false breakout setup, and it'll be a break back below the 5 daily moving average. The market is bearish when it's below the 5 daily moving average, and it's bullish above the 5 daily moving average. Okay, so bears need to get price below 524 and 521 for me to be bearish again. Otherwise, above 524 and we clear 528, more upside is possible. Now, this stock right here, Tesla, is not looking too good. Okay, we managed to bounce yesterday, but it paused at the 5 daily moving average. Can't get bullish unless it's above the 5 daily moving average. It's below it, gap down, and it pushed even lower. Now we play the next setup. We wait for the next setup. If it's a bearish setup, the next support at 376, 374.5, and especially the 373 level must break down. That's a critical fib level to give us more downside down to 370 or lower in play. If tomorrow we get some type of relief bounce, then I have resistance at 376, 378, and 380. Those levels must recapture. Give us that false breakdown setup. We trade with the traps here. Give us the false breakdown setup, recapture those levels, and then we could consider going long. Otherwise, if we break down more support levels, then we are heading down lower. Now, here's NVDA. Now, this is different from Tesla. It rejected from the 5 daily moving average yesterday, but today you guys can see it turned the 5 daily moving average into support. Okay, so above it is bullish, and it managed to bounce and recapture some lost levels, including the 124 level. As long as it's above that, which is a fib level, next targets are 125.5 and 127. If 127 clears, that'd be bullish. 129 and 130 plus, 130.5 and 132 plus would all be in play. Do not look to short unless we get a false breakout setup. So the last critical level that cleared was 124. So tomorrow, 124 and 122 must fail to put 119 or lower in play. Especially below 119, I'd be bearish because that'll put NVDA back below the 5 daily moving average. IWM looking bullish. It looked bullish. Yesterday, it recaptured the 5 daily moving average. Today, it got even higher and turned the 5 daily moving average into support and bounced. If this bullish follow through tomorrow, 229 and 230.5 must clear. Above 230.5, it's a good chance the bottom is in with 232, 233.5, and 235 plus in play. Do not look to short, guys, unless we break down support levels as usual. All right, well, it's above 229 right now. It'll need to break that level down. 5 daily moving average around 227. It'll need to break that level down. And this buy zone right here around 225 that was recently recaptured needs to break those levels down. 229, 227, and 225 all must break down for me to get bearish. Otherwise, it's looking bullish, and clearing 230.5 tomorrow would put a bottom in. Apple tried bouncing, but it has an inside candle setup. Did not clear the 5 daily moving average. So bulls still have some work to do. To get above the 5 daily moving average, they need to clear 233, clear 235, and clear 237, and I would be bullish. All right? Above the 5 daily moving average, I would be bullish. It needs to clear 233 and 235. Otherwise, if it fails to clear 233 and we break down support 231.5, 230, and 228.5, I'd be bearish at least till 227 and probably go all the way down to 225.6, 5-ish. But below 225.5, I definitely favor more downside. Bears would definitely keep control of momentum. Amazon, pullback time, gap down and reject it from the 5 daily moving average. Trying to break down, well, it did break down the fib level around 237. So more downside would need 235 and the fib level at 233 to break down. And if it does, we are heading down lower. Trust no bounce unless 237 and 240 can recapture, guys. And look at here at Microsoft, we have a double inside candle setup, which is very, very choppy, but that also tells us that Microsoft is getting ready for an explosive move, a big move. So hopefully it comes tomorrow. Key levels to watch right now is 414 and 415.5. Guys, I'm expecting something explosive. So if it's bullish, 414 and 415.5 clears, look to long. We're likely heading up to 418.7, 420 or higher. Now, if it's bearish, 412, 410.5, and all the way down at, let me see this low right here, 408.6. Yeah, we break down those support levels. We're likely going to be it's likely be an explosive move to the downside. So it's curling, guys. Is it to the upside, to the downside? It's gonna be big. It's gonna be big. Keep your eyes out tomorrow. Meta is squeezing as well. Well, not squeezing, it's getting ready. It's consolidating, getting ready to either squeeze or drop to the downside. Now the plan is to the downside as usual. Support levels at 704, 702, and 700.5 all must break down. I'm expecting something explosive, and if those levels fail, that explosiveness could push Meta to the downside. But if we clear 705.7 and we clear next resistance at 707, it's going to be a nice pop to the upside, okay? DXY still looking bearish. If we're going to get a bearish SPY, it would definitely help if DXY can get bullish. And to get bullish, it needs to pop above at least 108, okay? Because if we break down 107.5 and 107.1, more downside incoming for DXY. Coin still looking bearish to me. Did not recapture the 5 daily moving average and broke down some more support levels. I have the next critical support level at 274. That is a fib level. If it breaks down, guys, we are heading down a lot lower. 270 minimum, but I think we can drop down to 265 or lower. All right, trust no bounce unless 278 and 280 can recapture. The 5 daily moving average is all the way up at 286.5. So bulls got a lot of work to do, but getting back above the 5 daily moving average, then we can talk about being bullish again. DOGE looking bearish as well. Looks like it's losing at 26-cent level. I have the next one at I have nothing till about 22.8 cents. Looking bearish, guys. Do not go long on this unless it can pop above 26 and 28 cents, and especially 30 cents. No longs unless we get a false breakdown setup. A hard rejection for Bitcoin here. Breaking down yesterday the 50 daily moving average, and today rejecting it. Still looking bearish to me. I'll trust no bounce unless we get back above 98K and 100K. All right, that's just keep it that simple, guys. All right, thank you guys so much for watching. Definitely consider joining Uncle's Discord. Use the 50% coupon code. You get it for your first month off. All right, 50% off. Otherwise, work up. Let's continue working on our mindset. Continue staying unbiased and continuing kicking the market makers' ass. Bye.